Welcome back to Crypto Shockwave, the channel where we break down the biggest stories in the XRP world and give you the analysis that actually matters for your portfolio. $59,100. That is how low Bitcoin fell on Friday. 59,100, the lowest price of 2026. And when Bitcoin touched that number, every XRP holder on the planet held their breath, because the question was the same everywhere. Is $1 next for XRP? The answer is no. And today I am going to show you exactly why. 3 numbers, 3 signals that tell you the bottom is already in, or very close. Stay with me, because what I am about to show you could be the most important data of this entire week. So let us start with what actually happened on Friday, because the headline tells only half the story. Bitcoin plunged to $59,100, down from $71,765 just 6 days ago, a 17% drop in 6 days. And XRP followed, as it always does. XRP touched $1.09, a 19-month low, and then something happened that nobody expected. XRP did not break $1. Bitcoin was at 59,000, and XRP held at $1.09, not 99 cents, not 95 cents. $1.09. That is not an accident. That is a wall. And today, I am going to show you exactly what is behind that wall. But wait, because here is the first number that changes everything. And almost nobody is connecting this right now. When Bitcoin dropped 17% in 6 days, XRP dropped only 23.3% over the last 30 days. Compare that to earlier this year. From January to April, when Bitcoin fell 36%, XRP fell 38%, 1.6 times more than Bitcoin. Every single time. Consistent, predictable, and brutal. But something changed in the last 30 days. XRP is now falling 0.87 times Bitcoin's move. Not 1.6, not 1.3, 0.87. For the first time in this entire cycle, XRP is falling less than Bitcoin. And the reason why is the most important story in this entire video. The reason is institutional demand. While Bitcoin ETFs bled $2.43 billion in May, the worst monthly result of 2026, while Ethereum ETFs lost $540 million, spot XRP ETFs pulled in $131.94 million. 131 million, a record month. 0 outflow days in the entire month of May. 0. And in the first days of June, while the price kept falling, XRP ETFs added another $4.13 million in fresh inflows. Think about what that means. The price is going down, and institutions are buying more. Not panicking, not selling, buying at $1.09, at $1.12, at every single dip. They are not leaving. They are loading. Stop right there, because I need to show you the on-chain number that makes this even more extraordinary. While the price was falling to 19-month lows, while retail was selling in panic, 25 million XRP moved off exchanges. 25 million in just a few days. Off exchanges means into private wallets. Off exchanges means not for selling. Off exchanges means holding, long term. And whale wallets holding at least 10,000 XRP climbed to 332,230 addresses, a record, the highest number in XRP's entire history. The people who hold the most XRP added more during the crash. When price hit 19-month lows, the biggest holders did not panic. They accumulated. That is not fear, that is conviction. But wait, because here is the second number that the bears are completely ignoring. XRP's exchange liquidity just hit a 2020 low, 2020, 6 years ago, the lowest available supply on exchanges since 2020. What does that mean in plain language? The XRP available to sell is at its lowest point in 6 years, while institutional demand is at a record high, supply going down, demand going up, price still at $1.12. When supply falls to 6-year lows and demand hits record highs, one of two things happens. Either the price adjusts upward to match demand, or the disconnect gets wider until it snaps. History says it snaps, and when it snaps, it snaps fast. Now let me be completely honest, because I always give you both sides. The bear case right now is serious, and I will not pretend otherwise. Bitcoin has now touched $59,100. If it loses $55,000 on a weekly close, the XRP to Bitcoin ratio puts XRP at $1.05, barely above the line. And if Bitcoin falls to $50,000, that same ratio puts XRP at 97 cents, below $1. That scenario has not happened yet, but it is real. Bitcoin dominance is at 58%, near the cycle high. The market rotation index shows no broad rotation into XRP yet. Bitcoin is still eating the liquidity, and the Federal Reserve held rates at 3.5 to 3.75% in April, with the most descents since 1992. Zero rate cuts priced in for all of 2026 according to Polymarket. These are not small headwinds, but here is the reframe. The institutions building that $131 million position in May, they know all of this. They have the same data, the same macro picture, the same Fed uncertainty, and they bought more anyway, every single day of May, not one day of selling. Smart money does not buy into a falling market by accident. Smart money buys when it knows something retail does not see yet. So what are the three signals that tell you the bottom is in? Signal 1. Watch Bitcoin at the $55,000 level. This is the line between XRP holding $1 and XRP testing below it. Bitcoin touched 59,100 on Friday and bounced. As long as Bitcoin does not close a weekly candle below $55,000, the XRP to Bitcoin ratio holds, and XRP stays above $1. This single Bitcoin level is the most important number for every XRP holder right now. Signal 2. Watch daily XRP ETF inflows. 131 million in May, with 0 outflow days, was the institutional signal. In early June, the first days brought 4.13 million more. If daily inflows stay positive through this week, institutions are still accumulating. If you see 3 consecutive outflow days for XRP ETFs, the institutional bid is weakening, and the bottom is not yet in. Positive inflows during a crash are the strongest possible bottom signal. Signal 3. Watch XRP exchange liquidity. 25 million XRP just left exchanges. Liquidity at a 6-year low. When liquidity falls to this level historically, the next significant price move is up, not sideways. Up, because there is simply not enough XRP available to sell to keep pushing the price lower. The sellers are running out of ammunition. Let me bring this home for you now. Bitcoin fell to 59,100. XRP touched $1.09 and held. XRP ETFs pulled in 131 million in May, not one outflow day. 25 million XRP left exchanges. Liquidity at a 6-year low. 332,000 whale wallets at an all-time high. XRP falling only 0.87 times Bitcoin for the first time this cycle. The crash is real. The pain is real. But the data underneath the crash tells a completely different story than the price. When the tide goes out, you see who is swimming naked. And right now, the institutions are not swimming naked. They are fully dressed, and they are buying. If this video gave you the clarity you needed after the most painful week of 2026, hit that like button right now. And share this with one XRP holder who is panicking right now, because they need to see these 3 signals before the week is over. If you are not subscribed yet, hit that subscribe button right now. Turn on notifications, because the next video we are dropping could be the most important one you ever watch. Stay wise, stay positioned. I will see you in the next one.